Hi there. Okay, so let's do a whole topic on the stock market, shall we? The monetary system that runs the planet. I think that's a fairly intellectual thing to start. Well, to learn about the stock market. This is where all the action happens, folks. Or so tellingly is. But is it really? I mean, most of it's just manipulated, but if you do want to try and make a bit of money off the markets, then you can definitely try and do that. I would not I would not recommend it because it's so risky. You have to be absolutely disciplined down to the core with your risk management to earn money off this, and you would need to accept your losses of and make more than you gain. That's how you make money out of the stock market, and you won't make any money at all looking at the small time frame charts. You have to study these charts day in, day out, get a good feel for all of the markets, absolutely everything. And the dollar runs the dollar is the big daddy of the markets. Everybody knows the dollar is the one to be watching. The next one down from the dollar, I would say, would be watching the euro. So you'd have all these charts up: euro, US dollar, Japanese yen, Great British pound, US dollar, and then the Swiss franc, US dollar. You'd have all these charts up, and you'd be watching primarily for the strength and the weakness of the dollar throughout the day. That's just one array that you would need to be watching. The next array you would need to be watching as a professional trader is the euro US dollar, and you'd want to chart this right the way through from the 1 minute chart right the way up to the weekly or even the monthly charts. And you do this by analysing the charts using Elliott wave. Elliott wave is a very interesting process for analysing the charts. Very simple and fractional process. Is actually a fractional process of reality itself, but that's not anything to do with the stock market. Or is it? The stock market is crowd-based psychology, and in essence it does involve a lot of consciousness of a lot of beings. So, and again, if you want to study human psychology behavior, then the stock market is somewhere to be. So you've got all of your Elliott wave cycles up, and you're off and you're running, and you've got your risk management. You'd only want to risk 2 to 2.5% of your capital in each trade. How do you risk 2 and 2.5%? Well, first off, you take 2.5% of your balance first of all, and then you'd calculate your stop loss from your 2.5% that way, and you would probably need to code a nice piece of software into. I would do that through a MetaTrader 4 program, which there is risk management tools available. I've coded a few myself. So that's the way you would manage your risk, and still you would probably lose about doing that. Probably lose all of your balance a good 5 to 10 times, and each time you would lose your money, lose your balance, you'd probably want to commit suicide. So you would lose your balance, and you would learn each step of the way where you were going wrong. Now, some people will go absolutely bonkers, crazy, and stark and mad every time they lost all of their money. If you're a strong character like me, you would learn your processes, and you'd learn by your mistakes, and you would slowly gain the knowledge of how the markets work, and then you'd probably find out that actually it takes quite a lot of effort to get a little bit of money out of these markets. And also you'd find out they're fairly rigged as well, because as soon as you place in one trade, you've got the broker who likes to hedge it off the opposite direction. So what you would need to do, you need to find a broker that has a straight through trading, so you don't have anybody hedging against you. That will definitely put you in a better position to have you winning trades, but still there's an open market to see these trades anyway. So, and the banks are always in control. The banks are in control of everything you see on this earth. So they're pretty manipulating things to get involved in. Banks are. If you've got a fighting chance to get against a bank, then you must be a god. That's all I can say. Okay, so you've spent about 5 years of your life trading in the stock market, and you've learned all of this stuff, and you've just come to the conclusion that's probably not worth it. And if you are making money out there, and you're doing it like this, and you know, good luck to you, because I definitely do respect you for doing that. And if you're making a good living, then great. You're probably one stressed out person, and probably not radiating out, well, you probably are, in a roller coaster ride of emotions. And that's an exciting experience to have in this life, and definitely would recommend it. But you know, you could completely lose the plot as well. I've seen traders come in and completely turn nasty and very dark people, and don't understand themselves, and they just can't accept any losses. Once they lose their money, they completely go ranting off, and God knows what. They think they can do things their way, and they come into these shocks, get a big shock, perhaps then can't control everything, and they get desperate and they gamble. Desperate. As soon as you lose anything, you want to get it back as fast as you can. What you have to have in the game of trading the stock market is patience, absolute patience and discipline. You know, I really should get back into it, because I probably would be quite good, but at the moment I'm just focusing on my spirituality, because that's all you've really got, isn't it? Your spirituality and the light inside of your body. I mean, you can't take any of your physical stuff with you. Another great technique for trading the stock market is to use an average true range. So you take an average true range over the last 19 bars, and you would take a percentage of the last 19 bars, and you would times it by, say, I don't know, you would times it by 2. And if it breaks this percentage line, then you'd really go for it with your 2.5% of your disciplined risk management, and you'd make a few wins out of that, because that's a good strategy with the ATR. I've never actually gone through and traded off put calls. I mean, that sounds pretty ridiculous, just to sit there and trade off a put call, put and sell calls, because you're not analysing any of the markets, and you need price levels to push off, and it just all sounds a bit risky to me, that. Anyway, you could spend your whole life on your trading the stock market if you really want to. I mean, it's something to do, isn't it?